where you are in the world. Um, we're going to do a market update, and we are going to talk mainly about King Dollar. So let's have a look at King Dollar. Now, the reason we're going to talk about King Dollar is because things are potentially changing. Now, everybody obviously knows about the election and the fact that Donald Trump is heading into office in January, and he has had a profound effect on the market. Um, so let's firstly start with the data, and then we will talk about how that might affect the price moves. So firstly, let's see what we got this week. This week. This week, here's what we got on our economic calendar for the week. Screen 2, there we go. Right, here we go. So this is what we got for the economic calendar for the week. Let's see what might move this. Now, if you're looking at the Kiwi, you're really looking at trade balances. Out of all these numbers, the trade balance number is the most significant. New Zealand is a commodity-based currency. So with commodities, you do need to sell them. If you look at the trade balance year on year, then we can see that it's pretty low, but it is improving. So I mean, it's when I say pretty low, look at the extreme that we saw in 2006. So we went way we went way below that, and really this is sort of off the back of COVID. Supply chain issues, and they're still feeling and still reeling from the effects of that. But look what's happened recently. We're starting to see an uptick in the trade balance. Now it's got a long way to go before it's really positive, but we can see really why the Kiwi's been getting such a problem. Now, Donald Trump coming into office is kind of suggested if you look at things like Bitcoin and the like, assets. So the risk on assets, they've really started to increase. So there is the sentiment looks to have shifted in the market. After sideways consolidation, the sentiment for risk is starting to increase. So will we get a decent trade balance number from New Zealand? If we do, the New Zealand dollar would be on our buy list. It's going to need to beat this negative 9090 for the year on year and the negative 2108 for the month on month number. So if it can eke up, if it can start to move up a little bit, these numbers here, the core retail sales, import and exports are basically linked to trade balance. So these two numbers here will be trumped by the trade balance. So that's what you're watching for the Kiwi this week. You got CPI from Singapore, which is actually, you look at the Singaporean economy, it's pretty good. So the Singapore dollar is a decent one for a buying opportunity potentially as well. Employment levels now, unemployment, this is from Switzerland. Employment from any country is really pivotal to the interest rate changes. So employment level will be key. I'm actually looking for some shorts in the Swissy. So we've seen the CAD Swiss start to move to the upside already. I quite like the pound Swiss as a potential long, but I'd want to see a bad employment level here to suggest that the SMB could be reducing interest rates again. That would maybe add to the picture, and an increase in money supply as well would be good, or at least a hold if money supply comes down. That tends to be quite bullish, so I wouldn't want to see that. But the employment levels more interesting to me. And then as we go through the week, none of these numbers I would be that interested in. BOJ core CPI is going to be of importance. If the yen continues to strengthen, or has a chance to continue to strengthen, I'd want to see a BOJ core CPI number, which is at least in line with forecast, but really higher, a tick higher. Looking at speeches from the Bank of England could be of interest as well to see what they're starting to suggest. This is the big problem with the pound. I like the pound Swiss long, but the problem with the pound is that some of the economic data has been questionable at best. So not in great shape, really, the UK economy right now. Hi, Paul. Hi, Sang. Yeah, everybody else in the room, I hope you're all well and ready for the week. This is really my process, is what I tend to do. Just kind of look through the data, see what's going to move the market. Now, the reason that's important is that it tells me when there might be a trade and when there's not a trade. So I'm sort of at the minute I'm thinking trades in something like the dollar, which we'll look at in more detail in a moment, could be of interest. But I would want to see a setup that was really clean early in the week. And if there wasn't one, then I'd wait for a data release, to try and get in. Now, there's obviously an RBNZ rate decision as well on the 27th of November. Now, we'll look to see what that might do to the Kiwi. See if that's going to be a buy or a sell. They're saying a reduction of interest rates. Now, that could be a sell. That would point to a sell, but it's not necessarily going to be a sell. So we'll talk about that as well in a moment. GfK consumer confidence from the UK, again, an important number. It's a gauge, really, of how the UK economy is doing. So this I'll be looking at. Now, that's on Wednesday. So it looks at the minute, we got a monthly CPI indicator from Australia. CPI, all important for interest rates. Looks at the minute that Wednesday's the day. So that's what I'm trying to pinpoint at the minute, first and foremost. Can I get an idea of what's going to be moving the market? ZEW also on Wednesday from Switzerland. So that would probably trump the employment numbers. So that's pointing to Wednesday. And then we really start getting into the meat with the US. The jobless numbers are going to be more interesting in a way than the core PCE prices, unless this is a real beat. If this starts to tick up really high, then that would suggest buying the dollar again. But really, I'm looking at the employment picture in the United States. GDP is going to be important as well. All these numbers I'm looking for them to be weak because I want to sell the dollar. That's all I'm really interested in, is selling the dollar. If these numbers are strong, I'm not interested in buying the dollar. So that's off the table for me. And when we look at the charts, that should become clear. Chicago PMIs, that tends to affect the euro more than anything else. Euro dollar, I should say. So that won't be in. Let's see what else there is on Thursday. Some M3 money supply. That's not going to be that interesting. Current account, more CPI data from Japan, which might be waiting for the yen until then. GDP from Switzerland as well. Now, really, what I'd really want to do, if I could get into a long pound Swiss, then I'd be looking for this to ride it further. So I'd want to get in before Friday and to see if that would ride it further. And then we got CPI data from Europe. Now that suggests that we probably shouldn't touch the euro until Friday. So the euro might well be off the table. GDP from Canada as well. Seasonal biases for the Canadian dollar to be weak. So looking now at the charts, if we now bring the charts in, now the seasonals are, as I say, weak for the CAD. But if we have a look at the dollar, actually, any questions on that so far? It's the kind of process. So what I've tried to do is pinpoint the day that I'm most interested in to start with. And the day that I'm most interested in is Wednesday. And the reason that I'm going for Wednesday over every other day is that it's got the most significant economic data releases of the whole week. Other ones are significant for other countries, like the Eurozone will be significant on Friday. But I'm really interested in the dollar. So because the dollar is and the pound Swiss potentially, but because the dollar is the currency really that's probably the most overvalued, it becomes the most interesting for a turn. So I'm pinpointing Wednesday. Now, if you look at this, what's happened so far, dollar yen. So now the dollar yen, we do see a very strong trend to the upside there. And then another trend which has kind of happened here. So it's kind of got a double layer kind of going on here. Longer terms here. So if this drops, then in and around this horizontal level, or maybe even the trend line, depending on what day that is. Now that suggests that's not until next week if it was to drop. That would create a head and shoulders pattern. So I'd be, if this was to come down, what I'd be looking for is a drop into the horizontal level, a rally, and then it would create left shoulder, head, and right shoulder. And that would come and test, potentially come and test. Now, it could be a bit more shallow than that. It could come and test this horizontal level and in and around this this trend line, and that would still qualify for the head and shoulders pattern. So that's what I'd be kind of looking for. A dip down, maybe earlier in the week, a rally into the number, possibly, and then we could see on Wednesday whether we can get some shorts in the market. That might happen, it might not. It might be that what we're looking at is this floats on Monday and Tuesday, and then Wednesday we do start to see the movement to the downside, which does suggest we could get a bounce, but that does also suggest that there's some money to be made on the way down. That's the dollar yen. Now you can see that the strong move to the upside means that it is going to be under pressure. If you look on longer term time frames, this is the weekly. Last week did see some elevation to the upside, test this horizontal level and then reject it. So there are signals here that there's some selling coming into to play with the dollar yen. And the yen has just started to gain a bit of traction. And the reason for the gain of traction for the yen is that the interest rate differential is about to decrease, is about to diminish. So as the BOJ keep interest rates where they are, others start to move their interest rates down. That means there's a squeeze of the differential, which boosts the yen. I mean, it really is what it's doing is kind of it's taking away the value of the other currency, but obviously you need something on the other side. So the yen's one of interest really. So dollar yen, I'm looking for downside. Euro dollar, again, really low. You look at this on a weekly, and then to a monthly. There's the horizontal level on the monthly. So this really has got a week to try and grab this area back again. So will it battle to try and get back up there? Last week's bar doesn't suggest so, to be fair, but that doesn't mean that there's not a possible try this week to try and move back into this area. So there's still a chance that we could see some upside. The daily bar Friday, not great. Now, as I said, the euro is not a great one until Friday to really take on and to really have on board. So even though this could rally because the dollar weakens across the board, it wouldn't necessarily be my favored choice. This is the pound dollar, looks very similar. Now, the pound this week is actually seasonally pretty good. We'll have a look at the seasonals in a moment. But look at that on a weekly, we're again under this trend line. Will it try and get back and at least test this level? Probably. Probably. So what we'd want to see is a test of the level. Then there will be a probably enough some sellers in this area to try and get it down again, but the buyers might well push it back inside the level and see if we can get some upside. Now, the reason I'm looking for upside against the dollar is that I think it's so overvalued. So we'll be looking at that and then the test down again. And then that would promote the buy the next week to sort of like see if the next bar was to go sort of like a lot higher. So the rally could be played, or let it close above. See if there's a retracement that could be played. Now the data needs to match this up. So this is all kind of a kind of conjecture and projection at the minute. Dollar Swiss, I'm not quite as interested in. That's kind of moved higher, and I quite like the Swissy for a short. Now the Kiwi. Sorry, the Kiwi. The Kiwi is now of interest. Now the Kiwis is of interest because lowering of interest rates brings the differential down. However, is this already priced in? That's the question here. So if the Kiwi lowers interest rates, but the US also lowers interest rates in December, and the data has to suggest it's going to, that would point to a rally for the Kiwi dollar. And if we look at where we are with the Kiwi dollar, there is some room to the downside. Whether it's there or there, there's some room to the downside. So we can't discount that. But there is also a little grab here, little trend line there, which you could probably even put down there. Ooh, that's not great. Let's leave it there. So that's not too far under either on the month. It does mean the week is closed below, but do we also get what we saw with the pound, where we try and move higher with an interest rate decision? Possibly. So into Wednesday, Monday, Tuesday, Wednesday. It's Monday, Tuesday. I'd actually expect the weakness in the dollar to start, and then do we get the follow through after Wednesday? So setups on Monday and Tuesday, I would be taking to the long side and against the dollar, and then to see if we can get some follow through. Now this is the one I'm most interested in, and it's the Aussie. Now, if you compare this to the others, the Aussie hasn't broken down. There's the trend line with the Aussie. Now, there's two really. There's one there. There's also one here. So where the dollar has managed to kind of grab a significant level against all the other currencies, it didn't do it against the Aussie. This is again on a weekly chart. It's closed under this horizontal line, just. So that's something of note. We need to be aware of that. But it does suggest that if this does move down again and holds this area here, or it bounces from that area, there is a buy level here on the trend line, which is around about 64.90. Maybe a bit lower than that, actually. 64.80. Between 64.80 and 64.90, the Aussie dollar becomes interesting. Now the data has to back it up. For this to rally, the data has to back it up, and the data has to suggest the Fed are going to move interest rates lower in December. Now there's been a little bit of a pause in the CPI data in inflation coming down. We're around about 2.3, I think, maybe 2.6 or something. So it's higher than 2%, but there are some signals that the US economy is coming under some pressure, and we've got Donald Trump coming in. So, he's a big advocate of lower interest rates. He loves them. So he's going to put some pressure on. Now, that might mean that December's too early. He's not in until January, but he's kind of, the wheels of power would have started to move. So it's possible that he could shift it around. But between now, December and January, we're looking for upside against all against the dollar. Now, it might be that we get one more interest rate decision in December, which is a hold, possibly. Then we can start selling. So we're about, 2 weeks away from that event. But it might be that there could be some positioning now to see what happens. Now that you can see, this is a weekly chart, and we got 1, 2, 3, 4, 5, 6, 7, almost 2 months of dollar strength, and we're in a buy zone against all the currencies. But this is the Aussie we're looking at here. So there is a decent argument to be made to say that we should be looking for a turn. So what does that turn need to look like? Well, I would go to 2 specific charts for that. The daily, for one, that's the trend line. So getting back this area, and it might be that we need to see, again, some sort of inverted head and shoulders. Left shoulder there. Let's do that in white. Left shoulder there. Head here, which means that we are currently out of the left shoulder. Now look at this daily bar here. That's pretty good. That does suggest some buying and bouncing off this zone here. We've also got this here, which is a morning star. So there's a few patterns. Let me just delete the other pictures here. This is a morning star, which is a 3-bar pattern. One push down, one kind of hold, and then one push up, and the close above the previous open, the 3-day previous open. That's a really strong pattern. I mean, it's not a textbook morning star, but it kind of gives us the same idea as a morning star. This bar here opens, it tempts to come down, but it ends up closing above. It's not brilliant, it didn't close right on the highs, but it's still quite informative that there is some buying down in this area. So that's the daily. So I'd want to see this come up from the head, come down, create a horizontal level, match the kind of trend line area, and then start going up again. And that could take a few days. That might well be in line with the next interest rate decision. So we need to be aware of timing. So the dailies of interest, but the daily for me to kind of be interested would be a break of this trend line, or a return to here. Both would be good. You could trade both of them in different periods. Or if we want to get really aggressive, we can trade the 4-hour. Now you can see with the 4-hour, this is kind of hit this this kind of channel kind of area. Let's just make these lines a little bit thicker. It's hit this channel kind of area here, and it might even be that the channel's there, and we can trust this one probably at this stage because of the horizontal level support. So we can use this as a channel. So a break of that channel would suggest going up to the trend line. Whether we can get through it would be another question, but that would be another more aggressive way to play the dollar. Wait for the Aussie dollar, wait for the push up, and it might even have to come all the way up, then come down and test it there and then go. Or it might be that we trade the break, but anticipate this comes down. So take something off the table there. So take some dollars there, let it come down, add them back in here, and then see what happens. So I'm really interested in the Aussie dollar this week. Now, let's have a look at the seasonals and see what they're suggesting about the dollar. And if we go euro, and I'm going to bring the 20-year in. That's the kind of longest one here. So we'll bring the 20-year in. Here's our seasonals there. And it is the 24th. So it's going to start here. So this is suggesting that on the 27th, there is a rally for the Aussie dollar. Oh, sorry, the euro dollar. So there's a rally from, this is the low point actually. So that's suggesting there's a rally on the euro dollar. Dollar yen, less explicit, to be honest. It's sort of, it looks like there's some sideways consolidation here for the dollar yen, but no further upside. This is the pound, suggesting a rally. Longer term, it's not, it does start to turn again, but certainly this week it's suggesting a rally. Dollar Swiss is a bit more explicit, suggesting some downside. So again, some dollar weakness coming in. This is the Kiwi dollar, which is expecting a much broader rally from where we are. And this is the Aussie dollar suggesting a much broader rally as well. Actually, not quite as strong, but the Kiwi is the one, but the Kiwi and the Aussie do tend to move in tandem. So the interest rate change might, if it's a reduction in interest rates, it might actually still enable the Kiwi to rally because the next decision will be against for the Fed. But an interest rate hold, you'd almost guarantee that this is going to rally, almost. So you're really looking at that number on Wednesday to see what New Zealand do and see what they say in the statement as well. The numbers from New Zealand haven't been particularly good, so interest rates, will start to come down. But what tends to happen is the dollar, really over a long period of time, tends to be below everything else, and right now it's above everything else. So there's already a kind of disparity with the average and the mean. So we really are looking for the Fed to start reacting aggressively. The biggest issue in the United States is the employment numbers, because unemployment. But in saying that, let's have a look at the employment numbers. But the biggest problem is that that the labour market is linked as closely to as anything else to the Fed decision making. Now, if we have a look at what's been going on last week, we keep getting numbers which suggest the labour market's in pretty good shape. We're just going to have a look at something. Let's have a look at the start of this month, and we're just going to bring in the dollar. Just have a look at the dollar. There we go. Right, let's have a look. What's been going on, sort of like to form a, start forming a potential bias, and I'd almost guarantee this is what people are waiting for. Now, this is the unemployment rate here, and it's been problematic because it's remained, the unemployment number has remained low. Um, what we're really after is unemployment to start ticking higher. If the unemployment number can start ticking higher, that may well suggest that there needs to be some boost to economic activity in the labour market. But right now, it's remained low, so the dollar remains quite strong. But when you look at, some of the peripheral numbers, some of the satellite numbers that are being released, they're not in agreement. Non-farm payrolls was a big decline on the 1st of November. And if you then look at things like the ISM manufacturing number below 50, which is contraction. Now that is obviously damning for the labour market and also damning for prices as well. So that would suggest some weakness in the CPI numbers, but that would tend to predict it around about 8 months in the future. So we're kind of early in this run, but that's been predicting for quite a while. If you look at the PMIs here, manufacturing PMIs, these have been below 50 ever since April. So if this is going to predict it around about 8 to 12 months in advance, we're nearing that time where this is suggesting lower inflation. That's what it tends to do. It tends to lead the inflation narrative. And I say tends to, it doesn't always. So what traders are then looking for is the inflation narrative to sort of agree with that. Non-manufacturing is not as significant for inflation, but again, you sort of look at these jobs numbers and they're just all over the place. Continuing jobless claims is a climb here. Initial jobless claims was a climb there as well. No, they've reduced the interest. I'm just having a quick look at the CPI data. Here we go. CPI data. Now this is where we're really sort of like now sort of bringing our focus in. So 2.6%. There was just a little jump to the upside. So really, what people were looking for with the dollar is to continue to decline, and it didn't. But that last CPI print was on November the 13th, and we're looking at the next one on December the 11th, which could be, as I say, the catalyst sort of time. So really the takeaway right now is that the dollar is on my watch list, and whether it's on your watch list is a choice you need to make. But the dollar's on my watch list for a sell. What do I need to see? I need to see some kind of hint that inflation is kind of tucking back a little bit, or more importantly, that the labour market is starting to slacken, and there's more job losses. That would probably be enough of a catalyst to bring this dollar down. So the charts are only really telling us right now that the dollar's overvalued. It's not giving us a buy signal, and it's giving us an area to buy, but it's not giving us a reason to buy just yet. So we need to be careful, but it is on the watch list for a potential turnaround. Okay, so I'll leave it there. Unless there are any questions, I will open the floor to any questions if you guys have any. I'm more than happy to answer them in whichever form you like. You can come on camera or mic, or you can just post in the chat box. But if there are no questions, nothing else you want me to look at, then I will wrap it up. No, you all right? You all comfortable? You feel Yeah, good one. Gold. Let's look at some. Yes, and let's look at gold. Let's look at gold. Now, gold is another one that is well probably in that overvalued kind of area. It did have a dip back again, but the big question for gold is if the dollar is going to weaken, then why would gold weaken? Unlikely, right? I mean, let's look at the seasonals, and the seasonals are actually they've been pretty good on gold for quite some time. If we sort of like come back, the seasonals really do work very nicely with gold. Look at what the seasonals were suggesting at all this point here, and now they're suggesting that there's a bit of a dip, and then maybe some reduction in gold is it's not really going to come until mid. Well, actually, that interest rate decision sort of time. If you're looking at against the dollar, Pekrisami, yes, but not necessarily. I mean, I've got dollar versus I've got gold XAU USD. So yeah, I mean, on this particular chart, generally speaking, the answer is yes as well. But you can get gold pound, you can get gold Swiss, you can get gold Aussie. So it depends what you're trading it against. I'm pretty sure this broker only offers oh no, it offers gold euro as well. So gold pound or gold, sorry, gold dollar or gold euro. But yes, on the whole, you are looking for gold to be against the dollar. And if the dollar's going to weaken, why would gold weaken? The only thing is that we need to be very careful with gold because the dollar might weaken against all other currencies, but actually strengthen against gold. That can happen. This is the issue that gold has. That if inflation is the reason the Fed lower interest rates, gold is a hedge against inflation. Gold is also it's in that overbought territory. Look at this on a monthly. It's well and truly overbought. Not of interest to me. I've got to be honest. Gold at this area, not to buy, but selling right now is difficult because there are dangers in the world that are pushing gold higher. But can they get some sort of deal in and you need to watch this stuff. So even though the fundamentals might be one way or the other for gold, you need to understand that some of the reason that gold's rallied so hard is because of global fears and people fly to things like gold when they are worried about global tensions starting to raise up again. Can there be some sort of agreement of a ceasefire in Russia, sorry, in Ukraine? It's possible. It really is very, very possible. Donald Trump, seemed to have a much better relationship with Putin. So could he form a ceasefire? He maybe. So that could push gold lower. Could there be some sort of resolution in the Middle East? Maybe less likely. That seems to be ramping up a bit more actually. So that kind of keeps gold elevated. So this is one of the dynamics we need to be a little bit more aware of as well with gold. Yes, it's a hedge against inflation. So inflation comes down, that could start to weaken gold. But I think the biggest thing is probably geopolitical tensions because this rally has not been all about inflation. This rally has been to do with worry and concern and protecting. So that's what we'd want to look for. But right now, there's not really a whole reason to sell gold. There's still conflicts going on. To a degree, they're ramped up a little bit. There's still inflation, which is above 2%. So that sort of like keeps gold on the buy side. Intraday, gold's a buy. Longer term, I'm not so sure. I think we should be waiting for some shorts signals, and they're not there yet. So that's that would be my synopsis with gold. Oil. Um, Oil's in a buy zone. You look at this on monthly. Oil's in a buy zone. Um, can oil get the rally here that it needs to? Well, if you sort of like consider Trump's last administration, it would have been sort of 2016. So 2016 to around about there. I mean, you can see that, aside from the kind of COVID-19 scenario, oil was kind of going up. The thing about oil is that it is associated with growth. People use more energy when they are more bullish, when they're more confident, when things are growing. there is a sentiment with Trump coming in that there will be growth. There will be lower interest rates, and there will be much more growth in the world. Again, that's going to push the dollar lower, and again, that should have a positive effect on oil. So even though I don't think oil is necessarily going to fly to the upside because of the lack of supply, I do think that there's probably we are in a buy zone, and there's probably enough to suggest that we should go higher rather than starting to come down from this particular point. One thing that you got to watch with Trump is the production. So if he starts to announce that there's going to be a glut of production in the United States for oil, that would potentially drive the price down. But again, global tensions in the Middle East, that could flare up. Oil's in a buy, on a buy level. So oil's a lot more interesting than gold. Gold's difficult because gold's in a sell area, really has been for a while because it's overbought. But there's too much out there to suggest that it's going to be a difficult trade to short gold. Too much tension. But with oil, it's a bit more interesting because oil's actually on a buy zone. What happened last week? Another hold, sort of, in this area, and a really strong looking bar as well, closing at the highs. Um, there is a Trump administration which is more, associated with allowing the economy to grow by lowering interest rates. That should boost oil. That means that lowering interest rates will weaken the dollar. Oil is traded against the dollar, so there's lots of reasons that you would suspect that oil is a buy rather than a sell on a daily. What's happened? So you got a couple of trend lines here. You got that one. Maybe you got three or maybe even more. There could be one here. This area is not great, so let's not use that. Let's see what this looks like. It's probably there, actually. Maybe just a hint that that's started to come up. Yeah, a double bottom down here. So, that there are sort of maybe some signals that yeah, I mean the inventories are something to watch week on week, Gary, for sure. And if you want to kind of like see what Trump is doing, or what any administration is doing, then yes, look at oil inventories. But I think if you just think about the macro picture would suggest a boost up in oil. And you'd want to see that in the micro, which would be the inventories. You'd want to see those inventories depleted. But the macro picture would suggest a boost in oil. As I say, you got this double bottom here. You got this horizontal level that we've had a bounce up from. We've got have we got our higher low? Well, maybe there, not really sure, but there was a break of this at 73 I think is going to get the bulls really interested. But I would already suggest that this is potentially on its way. So you could be looking at pullbacks, but ultimately this to me is going to 75 and above. 75, between 75 and 80, and it's currently at 71. So I'd be bullish on oil personally. And that's just my opinion. I wouldn't touch gold. I'd be bullish on oil. That's the way I'd look at it. And then you'd be bullish on the FTSE because the oil has got a pretty high correlation to the FTSE and the CAD and the Aussie as well. So another reason that the Aussie could get a boost if we see oil start moving higher. Now, Bitcoin's a tricky one. Bitcoin's a tricky one. Again, you're looking at BTC and sort of basically sort of saying, well, I've got friends that are really interested in Bitcoin after not being interested for forever, and now all of a sudden they're thinking that they want to buy this market. Well, Bitcoin is well and truly overbought. Now, the big issue. This is really sort of this the issue for Bitcoin is almost twofold here. You kind of look at this. There's a trend line here, this high and this high there, which leads us up here. This is a monthly chart. Now we're currently above that trend line, but do we hold there by the end of the month? I don't know. The other big number is 100. 100,000 on Bitcoin. Does it, can it really sort of like get through that after such a strong run? It might do. And there might be another 10, 20% in this one. But to me, Bitcoin's in a sell zone. Now, that doesn't mean it's going to sell off. And it doesn't mean I'm bearish on Bitcoin because I'm absolutely not. But it's in a sell zone. And I wouldn't be interested in buying it at these particular levels. Um, if you kind of look at the pattern here, there's an inverted head and shoulders, and the inverted head and shoulders measured move. There's the breakout, would bring it up to around about 135. 135, 140. So in that area. So there's potentially another 40% in Bitcoin before we really sort of start to see the sellers come in. but it would have to do it in the next month for me, because when Donald Trump comes in, are we going to get a kind of buy the rumor, sell the news kind of scenario? So I think over the next month, it's your fair game on Bitcoin. Take everything that you can from it. Possibly we get a what would be better is a retracement down and then a move back higher again. It'll be healthier for Bitcoin. Not to say I think the overall picture is certainly bullish, but whether it kind of goes up straight away is a big question for me. So it's one that if you're not in, I would wait for 72, 75, before I'd be interested, or see a break above and then a retest of the 100,000. As long as it hasn't already touched 40, as long as it doesn't go up to 40 and then come back, because that would be a bit worrying. But if it got up to around about 110 and tested the 100,000, that would possibly be a place to get in. But I think you really with Bitcoin, you want to draw your trend lines, and it respects these levels quite nicely. So you get your trend lines in and see where it's suggesting. This would suggest that there's a trend line here with a horizontal level. So that would be a nice area. So 75 would be a nice area to buy it. Otherwise, this to me is in a sell zone right now. So I wouldn't be that interested. But good question, and well worth looking at Bitcoin. Righty. Let's wrap her up then, unless there's anything else. You are welcome, Yasin. That would be my thing. Right, hopefully I'm going to see some of you in Singapore. I'll be there in 10 days or so. So hopefully I'll see some of you in Singapore. And you're welcome, Gary. And we can sort of talk in a bit more detail. And I've got lots of cool things to show you and to give you as well. See you online. Amazing. Yeah, see you online. So I've got some really good things to give you um, for for the Singapore thing. And I think you'll be interested, Gary, actually, because you're mentioning sort of inventories for the US oil, which suggests to me that you probably have a same sort of thinking pattern that I do, where we're really looking at the data. So I think there's some stuff that I'm going to be able to give you, which is going to be really useful. See you soon, Randy, and anybody else that's in Singapore, I will see you then. If not, I will see you all soon on